They just launched a parallel financial system that serves half the planet, and most people have no idea it even exists. On January 15, 2026, the BRICS nations activated a settlement currency backed by gold and sovereign reserves. Not a proposal, not a white paper. An operational system processing live transactions right now. Russia and India are trading energy outside the dollar. China and Brazil are settling commodities without touching American banks. Saudi Arabia, the foundation of the petrodollar for 5 decades, just joined the network. This isn't about currency competition. This is about the systematic dismantling of the architecture that has allowed one country to print paper and receive real goods from the rest of the world for 80 years. And when that architecture breaks, everything built on top of it collapses. In the next 25 minutes, I'm going to show you exactly how reserve currency transitions work, why this one is accelerating faster than any historical precedent, and what happens to your purchasing power when the monopoly ends. Because what's coming isn't a market correction. It's a structural realignment of global economic power, and the timeline isn't decades, it's months. Let me start with the mechanism so you understand what's actually at stake. In 1944, representatives from 44 nations gathered at Bretton Woods and created a new monetary order. Every major currency would be pegged to the dollar. The dollar would be pegged to gold at $35 per ounce. And critically, international trade, especially petroleum, would be conducted in dollars. This created what economists call exorbitant privilege. Here's what that means in mechanical terms. Because global trade requires dollars, there is perpetual worldwide demand for American currency. That demand allows the United States to import far more than it exports year after year without the currency crisis that would destroy any other nation running the same imbalance. The United States prints dollars. The world accepts those dollars as payment for oil, electronics, automobiles, food, manufactured products, everything. America receives real goods. Trading partners receive paper currency that costs almost nothing to produce. And because foreign central banks need dollar reserves to participate in global commerce, they purchase U.S. Treasury bonds. That creates artificial demand for American government debt. It allows the United States to borrow at lower interest rates than any other country on earth, regardless of its debt levels or deficits. The exorbitant privilege means America can run an $800 billion trade deficit every single year without facing currency collapse. It means the government can run a $2 trillion budget deficit and still borrow at manageable rates. It means American consumers can buy cheap imported goods while the federal government accumulates $38 trillion in debt without immediate consequences. This is the foundation of American prosperity for the last 8 decades. Not innovation, not productivity, not superior economic policy. The structural advantage of controlling the global reserve currency. And that monopoly is ending, not as a distant theoretical possibility. Right now, in 2026, here's what changed in the last 60 days. January 2026. BRICS officially launches the unit currency system. It's not conceptual anymore. It's operational. Live transactions are being settled. Russia trades oil with India in units. China settles agricultural commodities with Brazil in units. Saudi Arabia and China are negotiating petroleum contracts denominated in units instead of dollars. The alternative system is live. January 2026. Saudi Arabia, the linchpin of the petrodollar system since 1974, formally joins BRICS. And when demand for dollars collapses, the value of the dollar collapses. Here's the cascade that follows. Dollar devaluation. Your grocery bill, your electronics, your clothing, your gasoline, everything. Government insolvency. The U.S. currently pays $1.2 trillion per year in interest on $38 trillion in debt at an average rate around 3%. If rates go to 7% average as debt is refinanced at higher yields, the interest expense goes to $2.6 trillion per year. That's more than all tax revenue from individual income taxes. The budget becomes mathematically impossible. You can't cut spending enough. You can't raise taxes enough. The only option is money printing, which accelerates inflation, which weakens the dollar further, which requires more money printing. It's a death spiral. Standard of living collapse. The American middle-class standard of living is built on cheap imports and cheap debt. When imports become expensive and debt becomes expensive, the standard of living collapses. Your salary might increase 5%, but prices increase 20, 30, 40%. Your purchasing power evaporates. Everything costs twice as much because it does. Retirement savings get destroyed by inflation. The comfortable middle-class life you expected becomes unaffordable. This is not speculation. This is not fear-mongering. This is the mathematical consequence of losing reserve currency status, and we can see it happening in real time. The BRICS unit system is the infrastructure. It's built, it's operational, and now it's about adoption. How fast do countries switch from dollar-based trade to unit-based or yuan-based or rupee-based trade? Let me show you the adoption curve and why it's accelerating faster than anyone predicted. Stage 1 was rejection, 2014 to 2020. Russia, China, and a few others started discussing alternatives to the dollar. It was mostly talk, some bilateral agreements. Russia and China settled some trade in local currencies, but small volume. Western economists dismissed it entirely. The dollar is eternal, they said. There's no alternative. BRICS is irrelevant. Stage 2 was construction, 2020 to 2024. Serious infrastructure building. China launches CPAS, the cross-border interbank payment system, as an alternative to SWIFT. Russia develops SPFS, their financial messaging system. India internationalizes UPI, their payment interface. BRICS nations coordinate on gold purchases, buying over 1,100 tons per year for 3 straight years. They're building the rails for an alternative system. Stage 3 is operational launch, 2025 to 2026. The unit currency goes live in January 2026. Saudi Arabia joins BRICS. Oil trade starts settling in non-dollar currencies at scale. We're here. This is happening now. Stage 4 is critical mass, 2026 to 2028 estimated. This is when enough countries join and enough trade volume shifts that the system becomes self-sustaining and the dollar loses its monopoly permanently. We're 12 to 24 months away from this point based on current adoption rates. Let me show you the adoption data that proves this is accelerating. Russia-China trade. 90% of bilateral trade is now settled in rubles and yuan, $0. That's over $200 billion in annual trade completely outside the dollar system. India-Russia oil. India is buying Russian oil and paying in rupees and UAE dirhams, bypassing dollars entirely. China-Saudi oil. China is now buying Saudi oil and paying in yuan. This is the petrodollar system dying in real time. BRICS expansion. 23 countries have formally applied to join BRICS, not fringe economies, major players, Indonesia, Turkey, Egypt, Mexico, Saudi Arabia, UAE, Iran, Nigeria, Thailand. These are not failed states. These are large, strategically important economies that want alternatives to dollar dependency. The network effect is critical here. Every country that joins makes the system more valuable for everyone else. When it was just 5 BRICS nations, it was limited. Now it's 10 plus with 23 more applying. Soon it could be 30 plus nations, representing over 60% of global population and 45% of global GDP. At that scale, the system doesn't need the dollar at all for intra-BRICS trade. And intra-BRICS trade is massive and growing. They trade oil, gas, food, minerals, manufactured goods, electronics, everything. If all of that shifts out of dollars, we're talking about $10+ trillion in annual trade that no longer requires dollars. That's the demand destruction that collapses the exorbitant privilege. Now let me address the counter-argument because I know what you're thinking. The dollar is too entrenched. Everyone uses it. The financial infrastructure is built on it. SWIFT processes 42 million messages per day. You can't just replace that overnight. This will take decades if it happens at all. And you'd be wrong, because it's not about replacing the dollar overnight globally. It's about creating a parallel system that's good enough for non-Western countries to opt into. And once that parallel system reaches critical mass, the dollar doesn't need to go to zero. It just needs to lose its monopoly. Let me give you the historical precedent. The British pound was the world's reserve currency for over a century. At its peak, two-thirds of global trade was denominated in pounds. Britain controlled a quarter of the world's land mass and 23% of the global population. The pound was eternal, unshakable, backed by the most powerful empire on earth. Do you remember the British pound? For centuries, it was the king of currencies, the world's reserve. But then something changed. World War I happened. Britain borrowed massive amounts of money, and the pound started to weaken. The United States, with its vast gold reserves and better loan terms, stepped in. By 1944, at Bretton Woods, the U.S. dollar officially took the throne. In less than 30 years, the pound went from global dominance to a regional currency. Now Britain didn't collapse, and the pound didn't vanish, but they lost what's called the exorbitant privilege. The economic fallout was devastating. Post-war Britain faced decades of austerity, currency crises, and a declining standard of living. Does any of this sound familiar? It should, because the exact same pattern is happening right now with the U.S. dollar, only much, much faster. Why? Technology. Building the SWIFT payment system took decades. China's alternative, CIPS, was up and running in just 5 years. The petrodollar system took 30 years to solidify after Bretton Woods. The BRICS alternative went from a mere concept to an operational system in under 3. The timeline is compressing, and the United States is making every single mistake that accelerates this shift. We're weaponizing the dollar. Remember the sanctions on Russia? $300 billion in reserves frozen. That sent a clear message to every country on earth. Your dollar reserves can be confiscated if you step out of line. China saw it. India saw it. Saudi Arabia saw it. And they all started building alternatives. We weaponized the SWIFT payment system by cutting Russia off. So other countries built their own. CIPS, SPFS, BRICS-Pay. We froze Afghanistan's central bank reserves. $7 billion belonging to the Afghan people, just frozen. Every developing nation saw that and realized their own reserves weren't safe. Then there's the unsustainable debt. We're talking $38 trillion, $2 trillion annual deficits, $1.2 trillion just in interest payments. The math simply doesn't add up. Foreign creditors see this and are becoming reluctant to hold dollars long term. Every time the U.S. weaponizes its financial system, it creates fear, and that fear is driving the rest of the world to build alternatives faster than ever. We are literally forcing de-dollarization through our own actions. So, what does the timeline look like? What are the key milestones to watch for that signal this is accelerating? First, in the second quarter of 2026, watch the BRICS currency unit's trading volume. If it hits $500 billion in quarterly settlements, that's proof of serious adoption. Next, third quarter 2026. Look for major oil contracts priced in yuan, or the BRICS unit. If Saudi Arabia announces a long-term oil deal with China priced in one of these, the petrodollar is officially dead. Then, 2027. Watch the BRICS Expansion Summit. If 10 or more new countries join, bringing the total membership to over 20 nations, that's a sign of critical mass. Between 2027 and 2028, keep an eye on the dollar's share of global reserves. It's already down to 58% from 71% in 2000. If it drops below 50%, that's the psychological tipping point. The dollar would no longer be the majority reserve currency. So what do you do with this information? How do you position your assets for a world where the dollar isn't the monopoly? First, reduce your dollar-only exposure. If 100% of your assets are in U.S. stocks, bonds, and cash, you are massively exposed to dollar devaluation. Diversify into hard assets that hold value regardless of currency, like physical gold and silver or even Bitcoin if you understand the risks. Diversify into foreign assets, international stocks in countries poised to benefit from this shift like China, India, and Brazil. Think about real assets like real estate in strong local markets, commodities, and energy infrastructure. Second, understand which sectors get hurt and which ones survive. Financial services heavily dependent on dollar dominance could be destroyed. U.S. Treasury bonds could suffer if foreign buyers disappear. Import-dependent retailers will struggle if a weaker dollar makes imports more expensive. But sectors like energy, exporters who benefit from a weaker dollar, and commodity producers could thrive. Companies with strong pricing power that can maintain margins, like Apple or Coca-Cola, are also well positioned. Third, watch the key indicators. If the U.S. 10-year Treasury yield goes above 5.5%, it signals foreign buyers are vanishing. If the dollar index DXY breaks below 95, it signals sustained weakness. If gold breaks $5,000 an ounce, it signals a global flight from fiat currencies. The bottom line is this: de-dollarization is not some distant threat. It's happening right now, and it's accelerating. The BRICS currency unit is operational. Foreign central banks are selling treasuries and buying gold. The alternative infrastructure is built, and it's working. We are likely just 12 to 36 months away from critical mass, not decades. The dollar won't go to zero, but it will lose its monopoly. When it does, that exorbitant privilege ends. America will have to pay for imports with real value, not just printed paper. The government will have to fund its deficits at market rates. The American standard of living will have to adjust downward to match our actual productivity. This is the great reset that Washington doesn't want to admit is coming. But math doesn't care about politics. And the math says de-dollarization is inevitable. If this analysis helped you see what's really happening behind the headlines, subscribe and turn on notifications. In my next video, I'm breaking down the specific assets that survive currency transitions and the historical playbook from every previous reserve currency collapse. You don't want to miss it. Stay informed, stay prepared, and understand that the world you grew up in is ending. What comes next will look very different. Thanks for watching.